Welcome back to Business Daily on Trust TV. This morning on the program, joining me to further discuss is Dr. Emmanuel Bashayi. It's been good to have you come to the studio. It's like we're having this happen, frequently now. It's good to have you join us this morning on the program to further our conversation. He's an economic and business analyst and consultant. So, before we get into the conversation of infrastructure and logistical bottlenecks impact on our Nigerian businesses and economy, let's take a look at, the story of the cost of cooking jollof rice. One of the things that was stated that yes, the price, the supposed prices are down, and the company, the SBM Intelligence, is harping on the fact that it was mostly because of the rebasing is why the food inflation is down, and that things are not reaching the people. I know you've talked about this before on the program a few times about how those numbers we're seeing are not necessarily what's the word I'm going to use now?
The reality on the
Yes,
ground.
reality on the ground. Yes, it's just only numbers and numbers and numbers. And they're saying the same thing now. How do we now translate from ideas in the heads or dreams in the clouds to reality on the ground?
So for me, I think it's us being as reasonable as possible, not to be too excited with numbers and completely turn a blind eye to the reality of the Nigerian people. So what I think I've seen happen over and over again is that government wants to present a certain level of optics that suits a certain narrative, and then the reality of the people is discountenanced. All right? So we should be careful about having happy statistics and unhappy people. I keep saying that all the time. Statistics are good, but the ultimate measure of statistics is when you see the reality on ground. When you say 1 + 1 is 2, the reality on ground for me is when I carry one orange and put them together, I get two oranges. Yes. So what the statistics and reality are saying are exactly the same. So I cannot be hearing that inflation is going down. The standard of my living isn't getting better. The money I have in my hand isn't necessarily better than, isn't giving me something better than what I was able to get yesterday or the day before yesterday.
I heard somebody saying this, someone close to me in my circle saying that, a few years ago, they were not earning as much as they're earning currently right now, but they were living a lot better, much better life than they are living right now, even with the way things are. So we're saying that, the inflation has impacted the money, and somehow, even if you're earning quite a lot sum of money, which brings me back to that conversation we had about the states and their allocation. Remember, we talked about it.
Yep.
If you're saying that they're getting more money now, but inflation is there, because it's the same thing. How do we expect that the monies are able to do what they ought to do?
So I give you an example. If I produce donuts, for example, and my factory is able to produce 10 donuts in a day, for example. Now, one donut used to go for, say, 100 naira. Now, for whatever magic, you now have 200 naira that you can afford to buy donut with. But my factory isn't having the capacity to produce 2 times the quantity of donuts you need. So the price of my donut goes up.
Because I can't produce what you need.
200 naira. You have 200 naira. Now you have double what you had yesterday. But today, that same 200 naira can only give you the same one donut. Now, this is the most practical way you can explain inflation, where the more money I have doesn't necessarily give me more goods than I can take. So when I have 200 naira today, I'm not able to get 2 times the quantity of donut I had yesterday, but my money is exhausted. So this is what inflation is, that I am not increasing the capacity of my factory to produce more donut, but I have had more money chasing the same number of donuts. Do you get the point now? So what has happened is that you now have more money, yes, in naira terms, but the things have become so expensive that you're even getting less in quantity than what you were getting before, because inflation has eaten it up. Now, if your income does not grow beyond inflation, if inflation is at 23% and your income isn't growing above 23%, you're going to have this crisis. Okay? So, it is true. The numbers look good on paper, shows consistent drop, yes. But the reality with Nigerians is that it's not as nice as you're putting it in my reality. Truth be told, some commodities have reduced in price and all. Rice has reduced, yes. Certain commodities have reduced. Tomatoes is reducing and all of that. Of course, you cannot discount the fact that you have the harvest season as well, which typically will mean there will be more goods in circulation, and then everybody wants to sell, especially when you're dealing with perishables. You can keep them. But apart from that, we should see a more structured and consistent approach to getting it. So in and out of season, are we going to guarantee that this price is going to go down? And remember, we didn't start at this point. So if government is saying, oh, but the prices are coming down, to where? That's my question. If you're only fixing what you broke, should I really be clapping for you? You broke the glass jar, you're trying to fix it. We were a lot better before you came. You broke us down. You're trying to rebuild us. Just get your job done. That's what I would recommend. Take us back to where you picked us. Then we'll now start talking about, okay, looks like this journey is beginning to look more promising and all. But as long as you've not even gotten us to where we were before you picked us, you're basically fixing what you broke.
Okay, this is not a topic of conversation, and I can see you're getting into it already. Before we go to that, this Dangote's plans to build and expand the refinery into a 1.4 million barrels per day finally. Of course, the other part of that story where he wants to now put up shares of the company on NGX next year. What's your take on both stories?
Very bold step, very courageous. I think we need to see a lot of that happening in Africa.
Okay.
And more importantly for me is, let's see how we can start trading more with ourselves than just thinking about the other continents. Africa is a large market. If we're able to break the barriers that stop us from trading within ourselves today, then it simply means we can harness the potentials that we have. So today, Dangote is one of the largest exporters of Jet A1 fuel to Europe. Can we make this an Africa-wide thing as well? So how about the largest supplier to South Africa, to Eastern Africa, to Northern Africa, and so on and so forth? So does Dangote have the capacity to do this? For sure, yes. The largest single train refinery in the world, of course, should do much more. And are the potentials there? Yes. Is the market available? Yes. Because even if Dangote refinery surpasses the capacity of that refinery in India, there's a market for it. Forget about the drama we're having with our Nigerian market. I'm sure the dust will settle at some point, and then we will feed the Nigerian market well. We have our neighbors that we can easily move refined crude products to and all. So I support Dangote 100%. And I think if he knows that he's punching below the weight of what he has put on the ground, then he should maximize the potential. And most importantly, we need to support this effort. For the idea of opening up, putting up some shares for sale on NGX, I support that as well. Because follow who no road. I mean, if the thing is working, is moving well, I mean, I should put my 50 cents on the table as well. Because at the end of the day, we shouldn't be seeing the wealth going out. We should also be part of the show, right? So I think I also support that. I'm glad that he's only doing 70-30, thankfully, because the refinery is already existing. So it's not like trying to raise funds to build the refinery. So he's trying to just give some people an opportunity to be part of the action. So I support that, and I can assure you that when that opportunity comes up, I'll find some money and put in there for sure.
You're now beginning to sell the Dangote.
Yeah, it's a good initiative, and I think for items and commodities that have a good future, especially when it's not just about gasoline and all, You may
Yes,
say
but he's
electric
talking
vehicles.
about, he's
Exactly,
saying
so
other
fuel,
things,
so the propylene chips,
yes.
which is very important for companies that do plastics and PETs. Your normal PET bottles, your polypropylene chips is used for your polyester bags and some of those things. So it's going to have wide usage for the long term, and it's important that we support great initiatives, especially that better our lot as a collective.
Okay, all right. So now, you said that, and it ties up to something again. We're talking about yesterday on the program. We talked about stocks and how we did well. And I want to go back a bit to your first thing when you talked about inflation, because the numbers that of our inflation numbers, our interest rate going down, is what people believe. My guess is what has helped with that investor confidence that we had in the stock exchange, where we went past the 150,000 mark and to me going well. And you are now saying that yes, these are numbers, but hopefully, and because of the as the year runs out, we'll come back to this conversation on how to translate figures from paper onto reality, so that people can say, oh yes, indeed, inflation is down, my pocket has felt it, my cost of living has felt it as well. Now let's delve into our conversation for today. Another thing that impacts our business and economy in this country, and that is infrastructure and logistical bottlenecks. One of our guests here, one of our major guest here, Dr. Aliyu Ilas, always talks about supply chain. That's what he calls it, logistics, basically supply chain. And he says, if you could fix the supply chain issue, you can fix most of the issues that we have in business. But let's just have an idea, an overview of what we're talking about. Now, a recent report by the Lagos Chamber of Commerce and Industry estimated that businesses in Nigeria lose around 2.5 trillion naira annually due to port inefficiencies and poor infrastructure. Logistics costs have been reported as high as 40% of product price, partly due to port inefficiencies, regulatory delays, and infrastructure gaps. The infrastructure gap is massive. Nigeria reportedly loses $3 trillion over 30 years to bridge its infrastructure deficit, and has only built about 60,000 kilometers of paved roads, amongst the lowest in the world. Power supply remains a severe constraint. Firms often resort to self-generation, adding to cost and reducing productivity. I've mentioned quite a few of the supposed bottlenecks that we already have in the country, and how this things impact the country, higher input, operating costs and all that. But you tell us, you're the business consultant and analyst. Some of these things we've mentioned, how really in real terms, I know people out there who will tell you, oh, this, because of power I have to buy, and now cost this, that. But beyond the little minute things and mundane things you hear on the road from the people there, how do these things really impact our businesses, and which of course in turn our economy?
So I'll take you a step backward. How does it impact businesses first? Imagine a scenario that you move fresh tomatoes from Jos to Lagos. From Jos to Lagos, distance about 1,000 kilometers, give or take. Now, on a good day, if you travel at 100 kilometers per hour, it should take you 10 hours to hit Lagos from Jos, if everything was equal. But it will take somewhere between 15 to 20 hours to make that same journey, because if the guy leaves in the night at about 4 p.m., he might get to Lagos at about 7 a.m. in the morning the next day. So that's a long time. Now, he's carrying perishables, meaning that if anything goes wrong, it can go very, very wrong. Tomatoes will get spoiled. It means that the value of tomato he's carrying will not get to the final destination. He's going to lose money. The transporter is going to lose money. Everybody's going to lose in the process. Now, this business will need to accommodate this risk. So if you had bought a tomato for 10 naira in Jos, for example, and was hoping to make a decent 20%, 30% after all costs has been taken care of, it's a decent business. But he will need to do about 50%, because he needs to maximize his profits if it goes well, because his losses are going to come very massive if it goes wrong.
Oh.
So, yes, So the price of tomato in Lagos will now be about 60 naira. Meanwhile, it left Jos at 10 naira. Now, do you get the point? So the guy in Lagos is buying tomatoes about 60% more than the actual price in Jos because of logistics and because of the fact that it's a risky business and the journey is a very uncertain one. But imagine if it was a better road network, very secured, no story on the line, vehicle is fine, road is good, the guy gets Lagos in good time. Business is good, the business owner makes small margin but has high turnover because he's going to go back tomorrow again and then he turns over. So the profit he will have made in one go, he can make it in many trips instead of making one profit. And then
I'm sorry to cut you, but that's if we're dealing with a decent person.
Well, if there's competition, it makes you decent. So if I'm going to sell my own at a lower price than you and we're coming from the same source, the same market, you will reconsider your pricing. Okay? So in a perfectly competitive market, this is what should happen.
Okay.
But then when things are not equal, you should expect unusual things to happen. But I'm just giving you like a perfectly competitive market situation. So the person in Lagos is getting a longer end of the stick because, it's getting the shorter end of the stick because of this problem. So this is how it affects the Nigerian business owner, because there are a lot of uncertainties in the mix. He has to protect himself. So infrastructure is key. Our roads get bad very quickly today because almost everything is on the road. Our rail system isn't working. As recently as 1996, 97, I took a train in Nigeria. I was a younger person then. And those are like the last batch of trains. After then, everything went south. But this number of tankers that we're putting on the road and they get to spoil our roads. So no matter how good our roads are, these things add to the reason why they get bad very quickly. So if I have a train coach, a train engine, it can move 30 tankers, 30 tanker coaches. So if it's going to Maiduguri, I move 30 tankers of petrol to Maiduguri or whatever it is. So you see, it eases the pressure on the road. So this is where we should be looking at in terms of infrastructure. How do we reduce the pressure on the roads? First of all, our number of road networks is very small compared to our, the number of kilometers per capita is very small. So while we need to do that, remember road construction takes time and takes concerted efforts. So we need to focus on getting more roads done, making the logistics even more easy, and then all of that.
All right, you've mentioned one infrastructure, which of course has a very major impact, especially on food. And of course, since food is one of the things that increases our inflation, so I see how that works. But away from the road infrastructure, what other infrastructure bottlenecks can we talk about that equally, and which are the major ones really? Road, you've mentioned it, that's a big one. Apart from that, which other one again are the major infrastructure bottlenecks that we have in
ports?
This
we need to have more. We have to decentralize our port system. So the water lines in the country need to be maximized. So apart from Lagos, Tinkan, Apapa, we should be looking at maximizing the potential on airports. I know we do a lot of clearing there. Then we should look at the Calabar ports and all of these other ports within the Niger Delta stretch. Now, something as simple as us dredging the river Niger. A lot of trade moves between Lagos and Onitsha. If we have that dredge, we can move cargo there and then clear them over there. So it's closer to the market, it reduces the stress and the pressure on Lagos. So we need to see more goods being cleared from the other ports rather than insisting it has to be from the Lagos port. That way it reduces the pressure and then also improves the efficiency overall. At the end of the day, it also spreads the prosperity. Riverine areas, coastal areas are usually richer because of trade and commerce. So most of the time, most countries of the world, you will discover that where their commercial capitals are usually situated around the ports, while the administrative capital can be somewhere else. An example is Brazil, right? Rio de Janeiro is the official capital, but Sao Paulo is a coastal area and is a commercial hub. Same thing with Nigeria. Abuja is the business, commercial, administrative hub. Lagos, a coastal area, is a commercial hub. The business is in Lagos while the paperwork gets to happen in Abuja. So we need to see how we can decentralize that. Let some ships dock in One. Let some ship dock in some other parts.
Not to, I would just not say, but do you think Lagos is willing to let go of that power hold that they have at the moment to say let's decentralize and make all these things happen? Because that's where one of the majorities of their IGR is through those ports.
True, but then we are one Nigeria at the end of the day. So we need to think beyond Lagos and think Nigeria. At the end of the day, it's our collective prosperity. So instead of my container taking 2 weeks to clear in Lagos, it can take 7 days to clear in One, for example. And then I get to go and sell it and go back and buy again. So my turnover is now faster because there's now better efficiency in clearing the goods and moving them into the market and all. And remember, it also impacts on the cost of the goods. Because the longer it takes for me to clear, the more money I lose per day. And I'm going to recover that money somehow through the consumer that's going to buy that product. So let's think Nigeria.
Okay.
Right? And not just, I mean, it's good for Lagos, great for Lagos that the show is happening there. You will like it if it is you. Everybody will want, I mean, that's the selfish part of us that want it to happen in our house rather than in our village. But then, at the end of the day, let's think about, let's have the helicopter view and look at it. This is total Nigeria. If we do this, it's going to benefit Nigeria. And then the pie is big. The commerce will explode, will increase. I mean, don't think that, so, I mean, in chemistry, there's something we call synergistic mixing of energy. When you have a capacity of, say, 70 tons, I have 70 tons, you would think that if we bring 70 plus 70 to 140, we end up having 160. Because of the synergistic mixing of energy. So the final output is bigger than the individual sum. So this is how it is. By the time you decentralize, you discover that we're even doing bigger business than what we're doing when everything was in one small place. And I think that's a reality that we need to start looking at, how we can expand this and then look forward to the possibility of bigger trade and bigger prosperity for us as a collective.
Okay, so you've brought us to the issues of states and their impact. So that now the question is, how will we get the federal government, the states, and to a certain extent the private sector? How do we get them into help in dealing with this infrastructure bottlenecks and logistical problems that we seem to have? So
my major recommendation will be PPP, public-private sector partnership. Government cannot do everything. I mean, government has its own limitations, but government can create the enabling environment. London Heathrow Airport is not owned by the government of the United Kingdom, right? So who says we cannot have a partnership with the private sector to build a port, for example? So we create the framework, have the right mandate and everything clearly called out, and then let the private sector participate. Same thing with our rail system. We can get the private sector to participate. Government can create the enabling environment and then get the private sector to work. As long as the deal is a win-win, the investment opportunities will come. I mean, the people who are interested in this, that have the already existing expertise, will come in. So today, government creates the roads, I mean, builds the roads. But there are transport companies that are privately owned, they pay taxes to government and they run on the same roads. Everybody runs his own business, but government provides the basic infrastructure. Our airports are owned by government, but the airlines are not owned by government. And the airlines make the show happen. So these are the things that we're talking about. And who says that the private sector can't build a port? The government still remains the regulator. And that framework can be created in such a way that government is not losing and somebody is not usurping the power of government and everything moves very smoothly. So I still recommend that government should make that opportunity available. And let's see, we never can know how high is high. And remember, when it comes to business, typically government doesn't run business very well. So, but government is a better regulator because they have all the powers to be able to make the laws and then ensure that the laws are followed. So government can stay as a regulator and let other people be the referee.
All right, now, infrastructure investments, how can it be structured so that it benefits SMEs? Because, these are the largest, contributors to our economy. How can it be structured so that it benefits SMEs and not just large firms?
When this happens, when you have a Take for example, when you have a construction work, a bridge construction or road construction happening, it's not just the construction company that benefits from this. Think about the food vendor. Think about the supplier of rods, the supplier of cement, and all of that. These are individual businesses that support this overall business. So when you think about it, don't think about it as just the big guy. The big guy needs the small guys because everybody wins at the end of the day. Think about America in the time of the Great Recession. The government decided to go into massive infrastructure. And that was the idea of how they would stimulate the economy. So the food vendor made money because she also has dependents. The worker, the skilled worker made money. The unskilled worker made money. The communities that the road followed through also made money because it also increased their prosperity overall. So whenever you have a project, a massive project like that, let's say a port project, think about the many businesses that are going to benefit from the smallest to the biggest. So the big guys that supply cement in tons, to the guys that supply iron rods in tons, to the guy that supply electrical installation equipment, to the guy that sells food, to everybody benefits. So it's about shared prosperity, not just about one person benefiting. Of course, there's going to be a bigger beneficiary than the other, but at the end of the day, everybody gets a small piece of the cake.
All right, now, when we eventually are able to get, these things working, what is the potential multiplier effect on the GDP if we can just somehow help our infrastructure by, let's say, 10 to 20%?
It will. So GDP is about the sum total of the goods and services produced in the country in a year. So if you have better infrastructure, it means going to stimulate the economy better. It means that the output will be better and greater. You'll be surprised that a 20% improvement in infrastructure can bring about a 25-30% boost in the GDP. Because I give you the example of the tomato. Now the person can turn over faster. The farmer in Jos makes more money because he's able to sell his tomatoes quickly and make the good returns on his investment. The transporter is making money. The trader over there in Lagos making money. Everybody makes money, and then the money goes back into circulation. It's estimated that every person has 10 dependents, and every person who earns has at least 10 dependents, and those 10 dependents have dependents. So you see that you're dealing with one person earning some decent income, and about 100 people are benefiting indirectly or directly. So definitely, remember at the end of the day, GDP is an estimate. So it will capture in all the things that have happened and say, if all of these new things that have happened at this amount, this is where it takes us to. And we have to talk about consistent improvement in these things to be able to continue to get the results that we're looking out for. Because if it is done right, it will definitely translate into better productivity, better production for the country.
So now there's one of the other things that come into place is things like technology. How do they in their own way help? Everybody's saying let's go digital, we're global markets. There's the AI thing happening already now. And some people are worried about it taking jobs, but that's another conversation for another day. But, how can we use technology to see that these things become a reality and in turn, of course, aid our economy?
So, we ignore technology at our own peril. It has come to stay. 10 years ago, there are certain gadgets that you are not using that are available today. Well, even 20 years ago. So technology will continue to evolve with our current reality because every day somebody is thinking about how we can make this better. All right? Today, I'm physically with you in the studio. We have opportunities of being virtually. And then maybe we'll start talking about 3D virtual reality. So I will not be physically in the studio, but a 3D representation of me sitting in the studio with you. These are advancements. And these things will happen as a need arises and things continue to go. So in terms of how we play here in Nigeria, especially when it comes to infrastructure, we have to start thinking about how we can leverage technology better. Okay? Now, delivery services now use drone technology. So you don't have to have the power bike or the dispatch riders, so many of them on the road anymore. Now, if we, by the time we adopt more of drone technology, it means that we're going to have more drone pilots than people who are risking their lives on the road riding a motorcycle and so on and so forth. So these technologies are going to evolve as we move, but then we need to be bold enough to embrace them and understand that while every good thing comes with its own responsibility, we must be willing to separate the chaff from the good and then continue to make progress. But technology is definitely something we're going to continue to leverage over time in every sector of our national life.
All right, so let's come to one of the things. These things cannot be done by wishes and, talks and all that. There's the part of funding. And we've seen the country or the government go to get loans and call it, for infrastructure of the rails for some loans, and then we're here now. But, away from getting loans and all that, what other funding models is possible to help in solving and closing this infrastructural gap that we have?
So there's nothing wrong with borrowing, right? It's about what you use the borrowing for. If you use the borrowing for long-term infrastructure, it's like you bring in tomorrow to today. It's good. It's good for everybody. So we trust the government to take the right decisions in terms of what they borrow money for and how it's being used. At the end of the day, it should be something that is tangible, something that can be felt for a long time, and then people will know that, okay, we pick this from the future into the present, and then it's making sense for everybody. Now, apart from the borrowing option, one of the things I said was a public-private sector partnership. Can we get more players into the space? Government's real role is to provide the enabling environment. I don't want to bring in my money to come and invest in a road infrastructure, for example, and then after 5 years, a new government comes in and says, oh, we don't know what happened the last time. And then there's a policy somersault. Somebody is now going to lose money. That's what people are afraid of. But they will be more comfortable if I lock in a deal with government today, in the next 20, 30, 40 years, whichever government that comes into power will honor that agreement. Which is why some people are very afraid of doing business with government. I have some friends that say, I don't do government contracts. No matter how juicy or how good they look, I don't. And this is the reason, because sometimes government struggles with continuity. Somebody starts a very noble project, and then as it goes on, somebody comes and doesn't feel that it was good enough, and then scatters it, and then there's somebody who started and has committed money into this, and the person is now left stranded. So government needs to make sure that once it is locked, gazetted or whatever it is, it cannot be changed that easily, because somebody's money is now involved, and then resources have already been committed and cannot just be changed overnight because somebody doesn't feel good about it. If we can be able to give that level of investor confidence, I would say, if you do this, don't worry, you're fine, you're safe, they have all the comfort that they need, then I'm sure more people will be able to come in. There are a lot of investment opportunities in Nigeria, but people are just being scared. I don't want to wake up tomorrow and then all I've worked for all my life just disappears. All
right, let's go away from its impact on us in-house here in country and look at looking at the AFCFTA agreement, how these things are actually affecting us on a regional scale and a continental scale as well, and what can we do to be able to move past it. I know that the agreement in itself is not really in force and working to it, but even for the ECOWAS that we're a member of, how can at least we what can we do to say that we're moving forward and doing better?
It's about it's about a will to do. Ability-wise, we're able to. We don't have any problem with being able. The question will be about willingness to. And whenever these discussions happen, a lot of conversation happens around what is in it for me. Everybody is trying to be selfish. I want to go my way or no other way. And then we are all trying to drag the bigger part of the pie. No, I'm the guy, the big giant, I'm the this and that. I think at the end of the day, we need to put away all those prejudices, break down all the barriers. Just assume Africa has no boundaries. I should be able to move within Africa as freely as possible. I mean, movement within Africa is quite tough. There are certain countries in Africa that they're just next door, but you can't just fly in there.
Yeah, the Congo, I hear, for you to get to the Congo, you have to do a round trip for a trip that should normally take you about less than 8 hours or so, but you end up doing about 16 to 20 hours.
Exactly. This is within Africa. okay? So you can imagine the stress involved in moving within Africa. And then when you now go, this is just travel. You now talk visa restrictions. So a Nigerian cannot easily bounce into South Africa and hope to get a visa on arrival. Now, if we're even talking about regional trade, trading within ourselves, we should even break the barrier of having a visa on arrival policy or even a visa policy for Africans. If I'm an African, I should move across all the African countries. Okay, we have in ECOWAS, you don't need a visa to travel to ECOWAS countries. And I think most of the other African blocs have that similar policy. But why do we even have that? Why can't I fly into Accra and just present my passport and get it stamped and walk in? Same way I would, why can't I do the same thing when I arrive in Johannesburg, for example? Okay. So these are also bottlenecks. Yes, they come with financial implications, but when you think about, at the end of the day, if a Nigerian comes into, a South African comes into Nigeria for free, and a Nigerian goes there, somehow it will net out at the end of the day, somehow. But then we need to have the will to say, you know what, we're brothers after all. Let's see how we can be able to integrate even better.
Okay. We have to go. Our time is fast spent on the program this morning. We're checking to see.
Yeah, I guess the time moves faster when you're having fun.
Yes. It's been a very actually insightful conversation. Of course, educating as well. And I hope you've learned one or two things and how you can equally, in your own way and in your own time, find a way to help ease off this infrastructural and logistical bottlenecks that affect your business and in turn our economy. I've been in the program with me today has been Dr. Emmanuel Bashayi, an economic and business analyst. Thank you again for joining us.
The pleasure is all mine.
I've been your host this morning, Chiamaka Nwafor. Same time, same place tomorrow. Bye for now.